namaskar, good afternoon, good morning, good evening, whenever you are watching this video. Now, my dear friends, my name is Professor Chirag Chothani. I am economics faculty at JK Shah classes. So, on behalf of JK Shah classes and JK Shah classes online, I welcome you all. Today, we are meeting to discuss a very important thing for your May 22 examination. Well, I am very sure for May 22 examination students, this video is going to be of very high level importance. However, even if you are a November 22 student or May 23 student, this video will definitely help you. Now, here we are going to discuss RTP, which is issued by the ICAI. So, institute in every attempt issues the RTPs, which helps us in understanding the subject in a better way and also helps us in evaluating our performance, our preparation. So now what I am going to do, with an assumption that you have already studied this entire subject once, I am going to solve the RTP for all of you. I am going to also tell you how to score the maximum marks. But before we go there, as you are all aware, economics for finance is for 40 marks, will be part of paper 8, group 2, in paper 8, part B, along with financial management, which is for 60 marks. Now, sir, there are some questions in our mind. In the RTP, FM and economics are given together. So, do we need to solve it together? No. First, you complete your entire financial management. Take 1 hour, 40 minutes to solve entire financial management paper. After that, you need to give 1 hour, 10 minutes to solve the entire economics paper. Sir, we are still left with 10 minutes that I am keeping as buffer time, so that if you are not able to match up with the time management, or if there is any lengthy answer which you are attempting, and if we are able to complete in that span of 2 hours 50 minutes, we still are left with a safe side of 10 minutes which we can use for revision. So please keep this timing in your mind. Individually, how many marks do we have here? 40 marks for economics. Now in 40 marks, you have to attempt 4 questions which will be 10 marks each. I repeat, 10 marks each, 4 questions you have to attempt. Now my dear friends, when I am saying 4 questions, question number 1 which you will be having in your examination, not in RTP, okay? In your examination, the question number 1 that you will have will be compulsory. And after that, question number 2, 3, 4, 5, out of these 4 questions, any 3 of your choice you have to solve. Minimum out of this 40 marks, you have to target 32 marks. And I am telling you this is very much achievable. However, what is the marking scheme? So, we will be having 3 types of questions: 2 marks questions, 3 marks questions, and 5 mark question. 2 marks, 3 marks and 5 marks. In this 2 marks question, 3 mark question and 5 mark, in all the 3 marking scheme you can have practical questions. But for 5 marks you will not be having theoretical questions, you will just have a numerical question. For 2 marks and 3 marks, you will have conceptual as well as the numerical questions. So wherever it is numericals, we will target full marks, and if in conceptual answers 2 marks and 3 marks question, see, if it is for 2 marks, then it is 100% sure we are going to get the full. In case of 3 mark question, there might be a smart deduction of half a mark here and there. But overall, it's a very scoring subject, my friends, which will help us not only in passing the paper, but also will be a great advantage in the aggregate total of our group 2 marks. So on that note, let's begin with the discussion of RTP, which is issued by the ICAI for May 2022. Let's begin. Okay friends, so now if you see this, in question number 1, in RTP we have received what? We have got A, B, C. There are 3 questions. Now one thing is very sure, whatever questions we have here will be for 10 marks. Now they have not given the marking scheme. So on my experience I am telling you which question will be worth how many marks. Now here if you see, what are the data requirement and outcome of different method. So these 2 questions are theoretical questions, collectively taken it will be 5 marks. One question will be for 2 marks, the other one will be for 3 marks. And this one where they are asking you to calculate national income using the expenditure as well as the income method, when you use this will be for 5 marks, right? Similarly, question number 2, how is multiplier? Do you agree? That means these are 2 theoretical questions. Then we have C, so this is worth 5 marks again. So here we are having 5 marks each, 2 questions in practical and rest of them are theoretical questions. Similarly, in question number 3, it is for 10 marks, 4 is for 10 marks and 5 is for 10 marks friends, but all of them are theoretical question, concept based questions. That means if you are able to understand the concepts nicely, you can write these answers, no problem at all. But the question here is, sir, for 2 marks question and for 3 marks question, how much we need to write? See, so for 5 marks, whenever it is there, if you observe in our case also, for 5 marks we are just having practical or numerical questions, right? So when I talk about practical and numerical question, one thing is very sure, if you solve it nicely, if you solve it in the prescribed manner, then it is 100% sure that you are getting full marks. So 5 mark 2 questions are there, that means 10 marks out of 40 are confirmed if you are able to solve that properly. Apart from that, we are having 30 questions, 30 marks worth of questions which are of 2 marks and 3 marks each. So in 2 marks, what you have to do? Please make sure you write point-wise answers. Wherever possible, write point-wise. Sir, but if I am more comfortable in paragraph format, it's completely subjective. If you can portray in paragraphs also, it is completely fine. But many a times I have observed, students are more comfortable in writing point-wise answers. So, in point-wise, if you are writing for 2 marks, ideally, I am not saying this is the standard thing because it also depends upon the question that they have asked, but ideally, in point-wise answer, it will be 4 to 5 points that you will write for 2 marks. And per point will be 3 to 4 lines. Right? So 3 to 4 lines, 1 point, and total 4 to 5 points for 2 marks question. Similarly, for 3 marks, again it will be point wise answer which I would recommend always. In this, you have to write 6 to 7 points, and again per point will be 3 to 4 lines. So in this manner you have to attempt all the answers. Okay. Now let's have a look at the question and how we are going to solve them. What are the data requirement and outcome of different method of national income calculation? First of all, whenever these kind of questions are asked, in your mind you have to tell yourself which chapter does this belong to. So when you see the word national income, that means it is from chapter number 1 in your syllabus, and they had said outcome of different method of national income calculation. So this will become part of unit number 1, because unit number 2 is completely Keynesian theory. So if unit number 2 is completely Keynesian theory, then it cannot be part of Keynes theory. Here it is clearly mentioned, the method of national income, which is part of unit 1. Now, what are the data requirement and outcome of different methods? That means they are asking you what are the different methods. So do you remember we have studied in the class also how many methods do we have for calculating national income? Think about it, how many methods do we have? So total we have 3 methods. How many methods, friends? 3 methods. So what are the 3 methods? So see, question number 1, part A. They are asking us about the methods. So when we talk about methods, there are 3 methods, right? First one is expenditure method. Second one would be product method. And third one would be income method. So these are the 3 methods that we have for calculating national income. Now when we talk about expenditure method, see, along with different methods, they have also asked you what are the data that is required. So when you are calculating expenditure method, the formula that we use for calculating national income would be consumption plus investment expenditure plus government expenditure plus exports minus imports plus NFIA minus indirect taxes plus subsidies minus depreciation. Simple format: C plus I plus G plus X minus M plus R minus P minus IT plus S minus D. Correct? So now in expenditure method, you are required all these types of expenditure. So you require expenditure of consumers, that is consumption, investment, government, and so on. Similarly, when I talk about income method, what do you need in income method? You will require what is the total income earned by the population of our economy. So in case of population earning income, when we talk about income, there will be rent, wages, interest, profit, NFIA and mixed income. So you need to calculate or find out all these data, add it, and then you will be getting national income according to income method. Similarly, what do you mean by product method? So product method is nothing but value addition method or value added method. So in this case, you need to have the data with you, and that will be the addition which is done in the production methodology. So these are the things which we have in question number 1, part A. So how will you answer? You have to tell them that whenever we talk about national income contribution or calculation, it involves production, distribution and disposal of all the goods and services. To calculate this, we have got 3 methods. Number 1, expenditure method, and the data required will be so and so. Income method, the data required will be so and so. Product method and data will be required so and so. This much you can write. 4 to 5 points, you will be getting 2 marks for this. Next question, which is worth 3 marks, I suppose. Can the GDP of a country be taken as index of welfare of the people? See friends, when we were learning economics for finance in the class, I always have a habit of teaching you first significance of national income calculation. Why national income calculation is important. But after that, immediately we learn the limitations. Limitations are nothing but the drawbacks. Now, in limitations, then we divide this into 3 parts. What are these 3 parts? Number 1, the concepts or the points we ignore while calculating GDP or national income. Point number 2 is the conceptual difficulties. And third one would be other challenges or other difficulties. Fair enough? Now this question, if you observe, it is highlighting what? Can the GDP of a country can be taken as index of welfare of the people in the country? thumb rule. This is not your opinion that they are asking for. So don't be very obvious and shoot your opinion. Yes, I agree with the statement. No, I disagree with the statement. Here the key is play diplomatic. Don't jump onto the conclusions. Don't give an examiner an idea whether you are assertive, whether you are positive about the statement or you are negative about the statement. They are not asking you about your opinion. They are asking you this question: what is the opinion given in the book? So your opinion matters in your real life, but not in examination, my friend. So here don't be yes or no. So can the GDP of the country be taken as index of the welfare of the people? See, in the significance we study the last point, economic welfare. That means if there is national income, we will have economic welfare in the economy. But the question is this for real? Can you say that GDP is increasing, that means there will be economic welfare? Do you agree? No. Why no, sir? Because see, always when your GDP is increasing, that is not a necessary or compulsion that your welfare will also expand. How, sir? Let's take one example. If let's suppose your economy is producing goods and services worth 1000 crore rupees, that is for this year. Now next year the production happened for 2000 crore rupees. That means there is a 100% GDP growth rate, and mind well friends, I am not talking about the rise in price, I am talking about real GDP growth. I am talking about goods and services which are produced more. So you would say, wow, this is a very good news. We are all happy. Our economy is growing by 100%. Well, congratulations. But mind well, my dear friends, what we are producing out of this 1000 crores additional which is produced. So we are producing more and more alcohol in the economy, let's say. We are producing more and more drugs. We are producing more and more tobacco products. So now we are producing tobacco, alcohol, drugs worth 1000 crore rupees more than what we were doing earlier. So now what type of economy are trying to create? Are you creating a drunkard economy or a developed economy? You decide. Now this might look well. This would look, oh my God, we are getting 1000 crore rupees extra. But that's not the that's not the point, my dear friends. You need to also understand where we are getting this output from. Whether it is for merit goods or demerit goods, producing demerit goods and increasing the economy or increasing the GDP is not the solution, my dear friend. It is not the solution. So what we need to do here, they are asking you the points that we ignore while computing GDP. This is a clear-cut answer that we have in JKSC material. Just the points you need to remember. So what are the points that we ignore while calculating GDP? So point number 1 that we have there, GDP is not an adequate data to calculate welfare. Then we ignore the quality improvements in GDP. Then we have production hidden from government authorities are not taken into consideration while calculating GDP. Then we also ignore the non-market production, that means the non-economic production which is producing, which are being produced but are not considered as part of GDP. Out of that, next one, we also tend to ignore the disutility of leisure time. What is disutility of leisure time? We calculate what we are getting, but to get that whatever we are sacrificing, we are not considering that sacrifice, which is absolutely wrong. After that, volunteer work and services which are provided are not taken into consideration while calculating GDP. So due to all these points, we conclude that GDP of a country may not be taken as an index of welfare of the people in the nation. It not necessarily results into welfare or development. That's end of story. If you write in this way, students, write down all the points, I am very sure you will be able to get the entire 3 marks. So first question was for 2 marks, second question is worth 3 marks. Next question is very important because it is a numerical question. So before going ahead, I would request you, please press the pause button, try solving this on your own and then cross check your and my answer whether it is same or no. Okay, please do that right now. Okay, hopefully now you have solved it completely And now let's go ahead from there. Question number C. Calculate national income with the help of expenditure method and income method. Okay. So now they have asked you to calculate expenditure method as well as income method from the following data. My dear friends, well, generally income method and expenditure method should give the same answer. However, you also know friends, for country like India, which is having such a massive population, and that too with so many states, union territories, and different kind of complications which in economics we face on day-to-day basis. So in reality, do you think the answer would be same? The answer is no. So there might be a difference. So please do not worry if your answer from expenditure method and from income method is different. Now let's evaluate first entirely expenditure method and let's derive the answer. Okay. So in case of expenditure method, if you are asked to calculate national income, do you remember the formula? What is there? So it is C plus I plus G plus X minus M plus NFIA minus IT plus S minus depreciation. Now keeping this in mind, we need to answer what will be the ideal level of national income using expenditure method. So mind well, I am using here expenditure method red color pen to mark the items which exclusively belong to expenditure method, either add or minus. So compensation of employees, add, minus or ignore, because compensation of employees is nowhere there in expenditure method. Profit, add, minus or ignore, again because it is not part of expenditure method. However, it will be part of income method, but we are not talking about income method now. Net factor income from abroad or above abroad, that is fine. So this is NFIA. NFIA, what we need to do friends? We need to add. So I will write down here add. This is as per what? This is as per expenditure method. So in expenditure method, we shall be adding this. Indirect taxes, what do you need to do with indirect taxes? It is minus indirect taxes. So here put the minus sign and write down in expenditure method, we are going to subtract that. Then it is subsidies. What do we do with subsidies? Add subsidies. So here it will be plus. Let me put the sign here. So this will be add subsidies in expenditure method. Private final consumption expenditure. This is C, right? C. So private final consumption expenditure we need to add. So this will be our addition as per expenditure method. Net domestic capital formation. Well friends, this is our investment amount. So this will be added in expenditure method. But I want to grab your attention here. See, you are aware about capital formation being investment expenditure. Capital formation is investment. But my dear chartered accountant friend, look at the amount which is given here. It is net. So what is net? Net is nothing but gross minus depreciation. So here already net amount is taken into consideration. So if you again deduct depreciation from the net, it will be double counting. So that's why the next here depreciation is given 150. We need to ignore. This is a trap. This is where maximum students go wrong. They say capital formation is investment expenditure depreciation. Sir, it is there in minus. Yes, it is in minus. But when you have to deduct that, only when the gross investment is given. Here it is net investment that is given, my dear friend. Net investment means it is already investment minus your depreciation. Then you have got the net amount. So don't make this mistake. This is where maximum people go wrong. But you won't. So net domestic capital formation added, depreciation. In usual cases, we would have deducted that, but here, of course, now you know, right? It is wrong, so we will ignore. Very good. Next one, interest. Ignore, it is not part of expenditure method, it is part of income method. Rent, again income method. Mixed income, again income method. Exports. Exports we need to add. So exports we will add in expenditure method. Imports we will subtract in expenditure method. Government final consumption expenditure. So this is G, government. I is done, export import is done. So this is expenditure method. Employees contribution to social security scheme, we have got nothing to do with that, just ignore. So these are the points that you are having. I am very sure you must have seen this and calculated what is the amount that we are getting here. So it will be 40 plus 20, 200, no 40, just 1 minute, I'll open my calci. So we can do it together. 40 minus 200 plus 80 plus 1800 plus 900 plus 50 minus 30 plus 1100. Okay. Now friends, by doing this, are you getting the amount of expenditure method? National income as 3740 crore rupees, 3740 crore rupees, right? That is absolutely right. So 3740 is our national income if you go by the expenditure method. However, now let's focus on the income method. Now income method I am taking blue color here. Okay. So income method, we have the formula for NNI, that is rent plus wages plus interest plus profit plus mixed income plus NFIA, right? This is our normal formula for for NNI that we calculate. Now see this, compensation of employees. Compensation of employees have to be added because this is wages. So in income method we will add this. Profit, again in case of income method we will add. Then NFIA are added in income method. Indirect taxes is to be ignored in income method. Subsidies again ignore. Private final consumption expenditure, we don't consider that in income method, so ignore that part. Next one is net domestic capital formation, ignore. Depreciation we do not consider in income method, so ignore again. Interest is to be added, so we will add this in income method. Rent is to be added in income method. Mixed income is again to be added in income method. Exports and imports we ignore. Government final consumption expenditure, ignore, right? We do not take into consideration while calculating income method. So all these things are ignored. Employees contribution to social security scheme. Oh my god, now what is this new thing? So employees contribution to social security scheme. What are the social security schemes, by the way, in India? So you have something called as Pradhan Mantri Suraksha Bima Yojana, right? So it is an insurance which is for exclusively for employees, where employees can contribute on monthly basis for securing their future. It's an insurance. Similarly, for pension we have Atal Pension Yojana. There is one more social security scheme. It is Pradhan Mantri Jeevan Jyoti Yojana. Now, my dear friends, all these things which are there are social security schemes which are introduced by government. Now, if employees contributing to that, it is already part of their wages. So, for the time being, we need to ignore this. Because this is not employer's contribution, this is employee. So, employee has already got some amount as income, which is nothing but their wages. Out of their wages, they are paying towards all these schemes. So, we have to ignore that part. So, here ignore it. Now, let's do the total. So, you can do it along with me in calculator. This is 1600, 700 plus 40 of NFIA, then ignore, then it will be plus 600 plus 400 plus it would be 800, then it is ignore, everything is ignored, I think. So the answer which I am getting here, it is 4140 crore rupees. So that will be national income when we calculate using which method, my dear friends? Using income method. I would have definitely wanted the answer for expenditure method and income method to be the same. However, given the current scenario and the data in front of us, it is practically not possible to get the same answer. So, my dear friends, we will have to satisfy with the answers which are given here. National income 3740, expenditure method, and with the help of income method, it will be 4140 crore rupees. I hope everyone is very clear in this. That completes our question number 1. Let's go ahead to question number 2. Question number 2A. Now, again, these two questions, 2A and 2B, collectively taken together will be for 5 marks. Read this question carefully. How is multiplier useful in functioning of Keynesian theory of determination of national income? Well, my dear friends, Keynesian theory of determination of national income, when we talk about this is part of which chapter? Chapter number 1, isn't it? But chapter number 1, it will be part of unit 2. Do you agree to this? Because unit 2 is entirely dedicated to Keynesian theory. Now think about it. In unit 2, what is the multiplier that we spoke about? Did we speak about money multiplier? No sir, that is in chapter number 3. Did we speak about tax multiplier? Well, no sir. Well, did we speak about foreign trade multiplier? That is in chapter 4. Sir, did we speak about credit multiplier? Sir, that is in chapter number 3. So what did we speak about? We spoke about investment multiplier. You remember investment multiplier? So here when I am talking about multiplier, actually they are targeting investment multiplier. So they are asking you to help or explain investment multiplier in Keynesian theory of determination of national income. So what is investment multiplier, my dear friends? Come on, tell me. It is nothing but K is equal to change in income upon change in investment. So how much our change in investment? So if let's suppose my marginal propensity to consume goes on decreasing and marginal propensity to save goes on increasing, that means people are saving more, high level of savings, which means it will increase the level of investments in the economy. If investments go on increasing, what will happen to the level of income? The income will also go on expanding. So what is the effect on national income when we have investment multiplier? Higher the valuation of multiplier, that means higher will be the level of income. Do you agree to this? So you have to explain this part in your answer and you will be getting 2 marks. Only 4 to 5 points. Next question. Do you agree with the statement? An important element of Keynesian model is that they relate to short-term period equilibrium and contain no dynamic elements. That means it is asking you that there is no dynamic element. What will you do? Directly answer in yes or no? No, my friend. Don't be so straightforward in life. Okay, many a times it might create problem. So here you cannot be directly, yes, I agree, no, I disagree. Nah, don't do that. So what would you do? So do you agree with the statement? First write down, an important element of Keynesian model is that they relate to short-term period equilibrium and contain no dynamic element. Well, in this scenario, Keynes has explained macroeconomic dynamics. Keynes has explained macroeconomic dynamics, isn't it? Now, what is macroeconomic dynamics? They have explained us, or Keynesian theory has explained us, how economic shocks help our economy. So, at the time when I say shocks, it can be either recovery or it can be recession. So, first you will have to explain the macroeconomic dynamics. Then you have to explain what are the shocks, recovery and recession. And then you have to explain what would RBI or what would government do at the time of recovery. They will try to expand the further economy by controlling the level of inflation. Similarly, at the time of recession, they will try to reduce the effect of economic downfall, and they will try to bring the economy back on track and result into prosperity. So these are the changes that our government will try to do only when they understand the dynamic elements which are produced by J.M. Keynes. Full stop. So this is how, you know what I am doing right now. I am giving you an idea. What are the content that you have to introduce in the answer. Rest everything you can frame the question, you can frame the answer in your own way. That is completely fine. No problem at all. Add some English to it and it will be taken care of, right? Next question, moving on to the very important part again, a question worth 5 marks. So let me just erase this quickly. And question worth 5 marks, again if you observe, it is only a numerical question. What is the question? An economy is characterized by the following equation. They have given C. C stands for consumption, where it is 40 plus 0.6 YD. 40 plus 0.6 YD. YD is nothing but disposable income. F they have given, G they have given, and tax they have given on the income. Hold on. F they have given. Now what is F, sir? What is F? F is nothing but factor investment. They are just trying to complicate things, students. But sir, this was never taught, neither it is there in ICI book. I agree to that part. I'm not saying, that it is not there, it is there in ICI book. No, I'm not saying that. It was not there. But see, understand friends, when they are giving you the details like C, G, tax, exports, imports, automatically you need to understand what does this F stand for. So F is nothing but your national resident foreign production, or we can also say it is nothing but factor investment which is done. So for us, this is nothing but I. So we are having C, we are having I, we are having G, and we are having T. In the next page, students, on this page if you observe, we are having exports and they have given us imports. Export is what? Export is 30, import is 25 plus 0.02 Y. Now, they have also given us, or they have asked us rather, what is the equilibrium income. So they have asked us calculate Y. Then they have asked what is the trade balance. Trade balance is nothing but exports minus imports. Trade balance is nothing but net exports, which we will try to create. And what is foreign trade multiplier? So foreign trade multiplier, you know the formula already. It is nothing but 1 divided by 1 minus B plus M, which we will try to calculate. Anyways, now coming on to the first part, let's not jump on to the last part first. Let's start with equilibrium income. What is equilibrium income? Y is nothing but C plus I plus G plus X minus M. Do you agree to this? Right? Now see this. Why we have not been given in the question, but definitely we are provided with C. What is C? It is nothing but 40 plus 0.6 YD. So I will write it as it is for the time being. Plus investment, I told you it is 20, plus they have given G, which is nothing but 40, plus it is exports minus imports. So I will write down exports is how much? Exports is nothing but 30, which is given on the next page, and imports is 25 plus 0.02y. All right, fantastic. So that will be plus 30 minus 25 plus 0.02y. This is our imports, bracket closed. Okay, there are two brackets here. Now y is equal to 40 plus 20 plus 40, or let's open the bracket first, no problem at all. So this will be 40 plus 0.6. What is YD? It is nothing but disposable income, isn't it? So it will be Y minus taxation, that is income minus taxes, plus we will be having 20 plus 40 plus 30 minus 25 open bracket. So this plus will get converted into minus sign, so minus 0.2y. Are you very clear with this equation? Now see here, henceforth you don't need my help. I am very sure about it. You already know now what to do, because the entire data is there. Now it is pure mathematics, right? So y is equal to 40 plus 0.6 y minus 2, because t is given here 2 already, plus we will take 20 plus 40 plus 30 minus 25, that is 65, minus 0.02y. Apologies, here I have written 0.2y, but I just realized it is not 0.2y, it is 0.02y. Well, no problem. So it is 0.02y. Again here it is 0.02y. So here it will be minus 0.02y. Next, so that will be y is equal to 40 plus 0.6y minus 1.2 plus 65 minus 0.02y. Now friends, see this, y will be equal to 40 plus 65 minus 1.2, that will be 103.8 plus 0.6y minus 0.02y. So that will be 0.58y. This will go on the left hand side. So that will be, let me do that in the calculator, y minus, that is 1 minus 0.58y, it is 0.42y is equal to 103.8. So now y is equal to 103.8 divided by 0.42. Friends, are you getting the same answer as mine? It is 247.142. So income here is 247.142. That's the solution for our income. So first thing we have calculated equilibrium income, my dear friends. It is how much? So it is nothing but 247.142. So you can just write down national income or equilibrium income. This is the amount. Does it end there? Well, no. The next part that we have is what? Calculate trade balance. Now this is very simple. Trade balance is nothing but x minus m. So exports I am having here given as 30 minus imports is how much? Import is 25 plus 0.02y. Now y I am already aware of, so that will be 30 minus 25 plus 0.02. Y is 247.142. How much will be this if you can do that in the calci, please? 0.02y into 247.142. Okay, 30 minus. So this would be 4.94. So 5 plus 4.94. So trade balance is how much? It is 9.94. Now they have not given in lakhs, rupees, crores, so I am not adding anything to it. We'll just keep it very simple as 9.94. So this becomes our trade balance. So trade balance is 9.94. The last part, my dear friends, what they have asked in the question, it is calculate trade balance and foreign trade multiplier. Now foreign trade multiplier, you simply know the formula, just imply that, no problem at all. So foreign trade multiplier, it is nothing but 1 divided by 1 minus b plus m. So it will be 1 divided by 1 minus 0.6. 0.6 is given here, that is our B, marginal propensity to consume, plus M. M we have already calculated here, so that will be 0.02. So this will be 1 divided by 0.4 plus 0.42. So that will be 0.42, which will be 1 divided by 0.42. The calculation that we get here will be 2.38. So what is our foreign trade multiplier? It is 2.38. So this is how we need to calculate our question, which is worth 5 marks. I hope you are very clear in this. That completes our entire question number 2. Easy, isn't it? Next, what are the various instruments by which the government can influence resource allocation? Now friends, see, first of all, which chapter does this topic belong to? Various instrument of resource allocation. Resource allocation is nothing but chapter number 2, unit number 1, fiscal functions. In fiscal functions, we have 3 fiscal functions. Which are they? Allocation function, redistribution function, and stabilization function. So when I am talking about this part, that is resource allocation, so it basically wants us to tell us how redistribution function operates. So what will government do in resource allocation or in the right allocation so as to avoid the market failure? So government will start producing economic goods here. So all the economic goods will be produced by government. Do you remember this point? Then government can give incentives and disincentives, right? Then what will government do? Acha, incentives means what? Incentives means it will be subsidies to the things which are good, and disincentives are nothing but taxes that government might charge to products which are not good for the economy, like demerit goods. Apart from that, government will introduce different types of policies like pricing policy, minimum wage act, competition policy. Government can go for regulatory advices. When I say regulatory advices, what do you mean by this? Regulations will be put into place. No smoking zones will be created, or below this age liquor consumption is not allowed. Government will create certain administrative and legal framework that any person who is not following the rules will be put behind the bars because it is going against the legal law. So all these things, my dear friends, will be part of question number 3A, a question worth 3 marks that we have here. So very simple, you can write it in the simple points. Here it must be given in the solution also. See this. Government can directly produce economic goods, incentives and disincentives. If you write these points, you will be getting full marks. No problem at all. Next question, my dear friends. Let's have a look at it. What are the intervention by government for correcting information failure? Again, which chapter? Chapter number 2. Information failure is nothing but result of, or it is adding to market failure. Information failure. Now what would government do if there is an information failure? That's the question. Can government take certain actions? Well, yes. In the advertisements you will see they many a times try to misguide the consumers, because of which the wrong products remain in the market and good products exit the market. So should government intervene here? The answer is yes. What will government do is the big question. So my dear friends, government will now intervene and do accurate labeling, will ask you to do content disclosure on the pack, like when it is produced, where it is produced, what is the expiry date, what is the MRP, what are the ingredients, nutritional facts. All these things has to be circulated in the market, has to be printed on the product itself. This is a statutory requirement. Apart from that, government can also go for mandatory disclosure of information. Every company that is getting listed in stock market, which is going for IPO, need to disclose the complete information to SEBI. Apart from that, there will be public dissemination of information. When you pick up the call and try to call anyone, when you pick up the phone and try to call anyone, students, the first thing that they will tell you is about the information of COVID vaccination. That thanks to you and the cumulative efforts of all the people who are working in that direction, we have successfully completed now more than 150 crore doses of COVID vaccination. This is public dissemination of information. Government is trying to provide you the information. Apart from that, you must have seen the advertisement on TV also, that don't do this, do this, jago grahak jago. That means, hey you consumers, you also have to apply some brains and think when you are buying the product whether that is the right product or no. There is regulation on advertisement. Advertisement standards are set. You cannot sell you cannot advertise about tobacco products or of alcohol in open market, that is in newspapers or on public display boards or on television. You cannot do that. Yes, I know there are some surrogate advertisement which is being done by these companies, but direct advertisement is not allowed. These are the intervention which government will do, which are the points that you need to remember. So see this point, government will take some action in case of information failure. So government will provide accurate labeling and content disclosure. Mandatory disclosure of information will be provided. Public dissemination of information will be there, and there will be regulation of advertisement and setting the advertisement standards. I hope you are very clear in these points, students. By writing these 4 points also you can get easily 2 marks, right? Simple. So these are the question worth 3 marks and 2 marks, A and B. Now let's go ahead to the next question. Let's have a look at the next question, students. What is the distinction between discretionary and non-discretionary fiscal policy? Which chapter is this? Chapter number 2, unit number 4, fiscal policy, isn't it? In fiscal policy, I am sure you remember, we have different tools, instrument, taxes, expenditure, public debt, budget, and so on. There are some instruments which automatically change with the changes in the economic cycle, which we call it as automatic stabilizers. And automatic stabilizers are nothing but non-discretionary fiscal policy. But government will try that automatically things become normal. However, many a times that is not the scenario. So government, if they are not able to adjust the economic cycle automatically, then government will have no other choice but to intervene in the market. And when the government intervention happens, it is called as discretionary fiscal policy. So discretionary is due to government intervention. Automatic stabilizers is without government intervention. Now if I want to give you one example, so first of all you will have to explain what is fiscal policy, then you have to explain automatic stabilizers or non-discretionary fiscal policy. Third point, explain the discretionary policy which we just spoke about. Fourth and fifth will be give the example. Automatic stabilizers. Let's assume if there is inflation in the economy. So now every now and then whenever there is inflation in the economy, do you think government will intervene? Oh, every 15 days there is inflation, there is deflation, government will intervene and again and they will try to create new policy? No. What will government do? Government will introduce something called as progressive income taxes. So whenever income increases, automatically the tax liability increases, so that the disposable income which is there with the people, it will be lesser amount. Now due to that lesser amount of disposable income, they will demand less, prices will be under control, and so will be the inflation. So in order to control the level of inflation, you need to use the progressive taxation. However, if there is recession in the economy and if government wants to do more expenditure, so what do you think? Automatically metro project will come up? Automatically new railway line will be constructed? And no. Government will have to intervene and do the expenditure. So whenever there is a turbulent time which is going on in the economy, if the automatic stabilizers fail at that time, the government will intervene and try to do different kind of capital or any other development expenditure which creates the level of employment, national income, aggregate demand in the economy, because of which we get economic growth. This is discretionary fiscal policy. So government, my dear friends, will use discretionary as well as non-discretionary fiscal policy in order to improve the situation of our economy. I hope you are very clear in this distinction. A question worth 2 marks. Last one. What is the relationship between monetary policy and money supply? Who controls monetary policy? RBI. Who creates money supply? I mean, increases or decreases the money supply? It is again RBI. But does RBI does the loan part or taking it taking as deposit? Is RBI doing that? The answer is no. So what is there in this case? What is under the hands of RBI? It is monetary base. This is part of chapter number 3, unit number 3, right? And this is unit number 3 and unit number 2 combined, because it is talking about both the things, monetary base as well as the money supply. So I will take into consideration both unit 3 and unit 2. Now listen to this very carefully, my dear friends. In this case, unit 3, we have spoken about monetary policy, about the CRR, SLR, right? So whenever we have CRR, SLR, repo rate, reverse repo rate, or any other kind of reserve requirement, whenever we have higher kind of reserve, more and more reserves, what will happen to money supply? The money supply will come down. Do you agree to this? As the reserves go on increasing, the money supply will come down. But at the same time, we also have monetary base, that is high powered money, which is printed by the RBI and circulated in the economy. So higher the level of monetary base, higher the level of high powered money in the economy, assuming that behavior of commercial banks and behavior of public remains constant, more injections which are done by the RBI in the form of monetary base, it will increase the level of money supply in the country. So there is direct relationship between monetary base and the money supply. But when we talk about monetary policy, RBI will also try to control money supply by increasing the level of reserves. So here we have to speak about both. Number one, we have to spoke about the reserves, and number two, we will also talk about monetary base, which is done by the RBI. So if you observe in this case, in central bank, country wants to stimulate the economic activity, it can does so by infusing liquidity or reducing liquidity. Here they have taken the example of open market operation. Instead of that, we can also take the example of SLR, CRR, repo rate, reverse repo rate, etc., etc. Then we have to speak about government securities, which injects the high powered money, that is nothing but the monetary base which we spoke about here, and how it improves the money supply in the economy. I hope friends you are very clear in this. That completes our entire question number 3. Now let's focus on the next question, question number 4. Question number 4. How is credit multiplier determined? Such a simple answer, my dear friends. Nothing to discuss here, When we talk about credit multiplier, what is exactly credit multiplier? It is also called as deposit multiplier, or it is also called as deposit expansion multiplier. It simply means how much of the amount of total deposits you keep in the reserve form. Depending upon that, how much money is created in the economy. Who keeps this, or who has the control over the credit multiplier? It is RBI. But who has to follow this? So RBI will ask commercial banks to keep the reserves in the form of CRR, SLR, and so on. So for credit multiplier, we also have one formula, and that formula is very simple, students. It is credit multiplier is equal to 1 divided by required reserve ratio. So if required reserve ratio is, let's suppose, 10%. So how much will be credit multiplier? It will be 1 divided by 10%, that is 0.10. The answer for credit multiplier would be 10 times, which means if 1 lakh rupee is coming as initial deposit in the market, it will rotate for 10 times and the total credit created will be 10 lakh rupees. If 1 lakh is the initial deposit, then 10 lakh rupee will be the credit multiplied, or the total money supply in the economy, right? So as simple as that. Next one, what is the meaning of compound tariff and how different it is from mixed tariff? Now this is an interesting question. See, when they have asked compound tariff and mixed tariff, don't directly jump onto the compound tariff. First explain what is tariff. Tariff is nothing but the tax contribution which every importer or exporter has to do whenever they are importing or exporting in the economy. Okay, now the first two types of tariff in imports, if you remember, it is specific duty and ad valorem duty. Yes or no? Now in compound tariff, you are applied both, that is specific tariff as well as ad valorem tariff. So you have to explain that. In mixed tariff, you are imposed both, but you have to pay whichever is higher. So here it is this or that in mixed tariff, but in compound tariff it is this and that. So it is not this or that. So in mixed tariff, my dear friends, it will be specific or ad valorem, whichever is higher, sir. But here it will be specific and ad valorem, both. But of course, remember, first thing we will impose will be ad valorem, and then it will be specific duty, because ad valorem is in percentage. Ad valorem is in percentage and specific is in amount. So if you import the amount first and then the percentage, then the tariff amount will increase. Well, that is not the case. So first you have to impose the ad valorem duty, then add the specific amount to it. So that completes our point number B, or question number B. Next one, what is voluntary export restraints? Well, this is part of chapter number 4, unit number 2 again. Voluntary export restraint, this is an export related measure. Government many a times does impose some measures which they try to, from which they try to control the level of exports in the economy. However, not necessarily every time the government will impose the restrictions. The exporters voluntarily, I repeat, voluntarily might reduce their level of exports. So when exporters voluntarily reduce the level of exports, it will be called as voluntary export restraint. Sir, any example of this? Well, I have many, but I will tell you one example. After the Pulwama and Uri attack on our country, which was done by some Pakistani terrorists, students, we as a nation, we never believe in war. We never believe in hurting some other economy. We are so busy in uplifting our own economy, our country, we don't have time for all this. But who can teach to other countries these things, you know? So after the attacks in our country, friends, which was done by Pakistan, our exporters voluntarily agreed that they will have no business, they will stop exporting to Pakistan. The result of which, the tomatoes which were being exported from India to Pakistan were stopped completely, and the tomato prices in Pakistan went up to 200 rupees per kg. And mind well, when I am saying 200 rupees, it is our currency. In their currency, it might cross 400 rupees. So that was the scarcity which was created because our exporters were not willing to sell to them. Similarly, if let's suppose if there is surplus production in some other country and they ask us as a help that for a particular period of time, if possible, please don't export, we would say, okay sir. Or let's suppose if due to our product, if someone else's religious sentiment or political sentiments are being hurt, then we will stop the exports voluntarily. In all the cases, students, whenever without any kind of compulsion, if exports are controlled, it will be called as voluntary export restraints. There is a spelling error here. It should be voluntary export restraints. I hope you are very clear in this. Next one, friends, explain the situation where a pharmaceutical company has full information regarding the risk of a product, but it still continues to sell. Oh my goodness, it's such a dangerous thing then. What is this scenario? This is the scenario of incomplete information. Many company students hide information, they don't provide the right information to the consumer, because of which it results into market failure. This is one of the very important reasons of market failure, isn't it? So what to do in this case? So well, we need to discuss what is incomplete information, how it is a market failure, and we need to also explain the Lemon's problem. Let's have a look at it. So this is asymmetric information. Asymmetric information means misinformation between buyer and seller. The pharmaceutical company is not giving complete information to us. That is asymmetric information. Now, the seller will try to sell more and more. If they go on selling this low quality product, because of which the high quality product will be out of the market. So low quality goods can drive the high quality goods out of the market, crowding out. Yes or no? Now, because of this, what will happen? We are just left with the low quality products in the market. This problem is called as the Lemon's problem. And this Lemon's problem, if they continue, then it will result into market failure. Full stop. 4 points, very easy points, right? Next one. Question number 5. Question number 4 we have completed. Question number 5, again theoretical question, only 4 questions. Let's have a look at it. Question number 5. What are the major concerns in functioning of WTO? Now see, they are not asking you the functioning of WTO, okay? Don't be misguided. They are asking you the concerns. Concerns are nothing but limitations. So you have to write down about the limitations in the functioning of WTO. Well, if you remember, this is part of chapter number 4, unit number 3, trade negotiations. This is the last answer in fact. WTO, what are the achievements and concerns? So what are the concerns that we have? What are the limitations? Let's have a look at it. Number 1, trade liberalization is very slow. WTO started in 1995, we are in 2022, you are still saying you are working. If you would have worked really hard, the trade must have liberalized by now. Then there is complex network of regional agreements. WTO itself is an organization which gets all the agreements signed. But inside that organization also there are some countries who are making their own agreement, which we call it as regional trade agreement. Or there are not one or two agreements, there are more than 303 agreements right now. So such high number of regional trade agreements, then what will be the importance of WTO? That's the concern we are raising. Then the trade in agriculture, textile and apparel has been negligible, that is very minimal. Then we have Doha development round which happened in 2000-2001. It is still pending, no outcome of Doha development round in 2022 also. If the things continue in the similar manner, what happened to GATT can also happen to WTO. Similarly, how Uruguay round was the end of GATT, can Doha development round be the end of WTO? That's a big challenge because there is no proper result or outcome here. And next one, specific to developing countries, they are facing many difficulties. So these are the difficulties which are faced by the developing countries. Why developing countries face all these difficulties, students? Because see, WTO gives special privileges to the underdeveloped nations. Yes or no? Yes. Whenever they open up the trade, developed countries are automatically privileged enough to take the advantage. So developed countries are the privileged ones. Underdeveloped countries are getting the privilege from WTO. At the end, who is at the mercy of their own? It is developing country. And they don't get the support from the developed countries at all. That's why they result into big problems. These are the challenges, students, that you need to remember and write in your examination a question worth 3 marks. Next one, how does income leakages affect the multiplier? Okay, now see, income leakages means what? You have earned the income, ideally you should have spent it, but you have not spent. What you have done? You have tried to hoard your income. You have tried to remove it or take it away from the economic mechanism or the economic cycle. Now if it is not being put again in the economic cycle, exit of that will result into lower money availability in the economy. That will reduce the level of multiplier effect. More the income which is injected into the economy, it will expand the level of multiplier. If we have more of leakages from the system, we take money out of the economy or out of the circular flow, that will result into leakages, which will result into fall in the multiplier. That is what exactly we have to write in the answer. The multiplier concept is introduced to the Keynes theory. It explains the shift in investment caused by the change in the business expectation. Now, the multiplier shows how shocks to one sector can be transmitted throughout the economy, how the effect in one sector can result to the effect in the entire economy, friends. Now, income increasing due to the initial investment does not go on endlessly. There is a challenge, there is a point where it will stop. Now, the process of income propagation slows down and ultimately comes to an halt. There it results into leakages. Now, income that is not spent, currently produced consumption goods and services, may have leaked out of the income stream. That means ideally whatever income is generated by the household should be given to the firms for purchasing goods and services. But if it is not given, then it will result into leakage. And higher the level of leakages, if this goes on increasing, friends, what will happen to the multiplier? Come on, the multiplier will fall. This is exactly what it says here. There is a leakage from income stream which reduces the level of multiplier. The more powerful these leakages, the smaller will be the value of multiplier. Very clear in this entire part. So that is our question number 2 in question 5. So 5B worth 2 marks. Next one, friends. Which is the most appropriate method for calculating national income in developed countries? Now again a question worth 2 marks possibly here. In developing countries or in developed countries or in underdeveloped countries, the mechanism that we use are different. See, India yet is not that developed. We are on the verge of becoming a developed economy. We are in the verge of becoming the top 5 nations of the world in all aspects. However, when we talk about developed countries like US, Germany, UK, France, and so on, which type of methodology do they use when they are calculating national income? See friends, in India, people tend to hide their income. People don't disclose their entire income in ITR, right? So government doesn't get the right information. So a country like India has to use value added method in certain cases and expenditure method in certain cases. However, for a developed country like United States of America, where everything is digitally operated and the money circulation is under the view of government very nicely, people are literate and transparent in most of the cases, conditions applied. So in that case, they disclose their income correctly to the government. So if income disclosure is proper, they need not even calculate expenditure or value added method, because just by using income method, they will be able to calculate whatever is the national income of the country, right? So in case of developed countries, it will be income method that they need to use. So all three methods of national income are very important. Ideally, they should give us the same figure, but we have calculated today itself, friends. There was a question which we have calculated and the amount that we got between different methods was different. So we have this different way of calculating. So income method may be the most suitable for the developed economies, and then what will happen in case of India, that also we have to write about. So this will complete your question number 5C. The last question, my dear friends, what is significance, that is importance of liquidity preference of behavior towards risk? Do you remember which chapter does this belong to? So this is chapter number 3, unit number 1. This is post-Keynesian theory of determination of money demand, right? Post-Keynesian theory of demand for money, and this theory was given by Professor Tobin, if you remember. There is one more theory which is given by Professor Baumol and Tobin together. That is not the one, okay? This is the sixth and the last theory. So what did Tobin say? Tobin had mentioned that whenever people deal with demand for money, they will not invest in only one asset or they will hold money in liquid. Rather, they will create portfolio. So there is optimal portfolio approach which is given by Professor Tobin. Now, in this optimal portfolio level, they might invest in cash or they might invest in bonds or any other alternative securities. So in his classic 3 article, that is liquidity preference as behavior towards risk, in the year 1958, Tobin established the risk avoiding behavior of individuals. In this theory, Tobin spoke about the portfolio allocation between money and the bond holdings. The money is considered as a store of what? Store of wealth. So either you can hold the wealth in money form or in the financial asset form. Tobin said that money in the portfolio is because of the rate of return on holding money was more than the rate of return on holding interest earning assets. What do you mean by this? See this. If you are holding money, that is liquid cash, how much interest do you get? 0%. But still it is better than the negative interest rate, isn't it? So if alternative earning asset is giving you negative interest rate, you will not invest, you will still hold money in liquid form, right? But if you are getting a better opportunity, invest. Demand for money will come down because you have invested the amount, right? Similarly, it is riskier to hold alternative asset by just holding money alone, because government bonds and equities are subject to market volatility while money is not. So what you will do, you will consider all these factors and then you will invest in various financial assets excluding money also, depending upon the rate of returns that you are going to generate, and you will create a portfolio. So that's the significance of liquidity preference of behavior towards risk. I hope friends you have understood all the questions that we have discussed so far. That completes our entire paper discussion of RTP. I hope this session was worth for you. With that, This is Chirag sir signing off. God bless you all. Until next time, thank you so much. Jai Hind, Jai Economics, and all the very best for your examination. God bless you.